Hey everyone, welcome back. So we're going to do another video on the miners. This time around we're going to have Riot and we're going to have also Hut 8 for the production updates for September. Hut 8 has come down quite a bit as far as the production of BTC is concerned because they're no longer mining Ethereum. So we'll take a look at that. So that's actually not good news for them. We'll also take a look at Riot. Riot, even though their hash rate is going up, their BTC production is going down, but we'll get into the reasons why. All right, so as always, not financial advice. You guys know the drill here. I'm invested in following coins and companies for full disclosure. And let's take a look at how the stocks performed today really quick, and then we'll get into the other information. So Riot was actually up 5.56% on the day to $7.59. It's up a little bit in the after hours right now, another 0.13% to $7.60. And taking a look at Hut 8, Hut 8 was up 8.9% today to $2.08. It's up a little bit more in the after hours, also 0.96 to $2.10. We can see that Hut 8 at least bottomed out here, possibly back in, when was this? September 5th at $1.27. It obviously spiked pretty high to $3.70 and has come back down since then. Riot, if we look at Riot really quick, that one also bottomed out here at right around the same time. July 5th, not September 5th, July 5th for both of these guys. Ran up to $10.52, came back down, and it is coming back up as well. So that's how the stocks have performed so far. Let's take a look at the news that we have for them, and we'll get into the numbers here as well. So Riot has announced, obviously, their production updates for September. Here's the key ingredients. So produced 355 BTC for the month, which is a decrease of approximately 13% as compared to September of last year of 406 BTC, and it's also a decrease from just in August of this year alone. They currently hold about 6,755 BTC. They sold 300 BTC, generating net proceeds of approximately 6.1 million, and has a deployed fleet of 55,728 miners with a hash rate capacity of 5.6 exahash. So that's actually pretty good growth there for them. And here's a quote from CEO Jason Less. "We are thrilled to announce that Building D, the sixth building at our Rockdale facility, is now online. Our team has expanded Riot's total deployed fleet by 9,070 miners and increased our hash rate capacity to an all-time high of 5.6 exahash. Additionally, we have already received nearly 15,000 S19 series miners, including the newest generation S19 XPs. So that's actually really good news there. The XPs are the 140 terahash miners. And then in the coming months, we will remain focused on aggressively increasing our deployed hash rate as we work towards our goal of reaching 12.5 exahash in the first quarter of 2023. So that is obviously another, possibly 7.1 exahash in growth within the next 6 months. So they would have to basically install about one plus exahash a month to get them to that in the 6 months. 1.1, 1.2 roughly, right around there. They have to install each month. So that is all the update we have for them. They didn't mention anything about how much they would have generated from the power supply had they curtailed electricity, but I'm guessing it's going to be quite a bit because we can see that production for BTC is way down from August. So let's take a look at Riot here. All right, so here's Riot. Riot has 154 million shares outstanding. Stock price is obviously higher than 719. 719 is the old price. I still have to update this. Market cap is 1.1 billion roughly, and 52-week high in the stock price is $46.28. 52-week low is $4.02. So we're definitely off the lows for right now. BTC HODL is 6,775 BTC. Is that correct? Did I mark that right? Yep. Okay, 6,755. 77. Wow, I can't talk. 6,775 BTC, which equals to be about 130 million in revenue or value. In that, and the HODL market cap is 11.69%, and each share has about 84 cents of HODL position in it right now. Looking at the production here, we can see here that in September they mined 355. Let me zoom this in for you guys. There we go. 355 BTC in September. August was 374, and then July was 318. So obviously that was their worst month for production, but obviously probably one of the hottest months as well. So they curtailed quite a bit there. June was 421, May was 466, April was 508. So April, and actually March was their best month here, 511 in March. February was 436, January was 458. So they have been coming down in BTC, even though their hash rate has been going up. So that only leads us to believe that they have been curtailing their usage or the miners and basically selling the power back into the grid, making money off of that. So on BTC alone, they generated about 7 million in revenue. It is 19 BTC less than last month in August, and about 5% less from August. So that's obviously not good. We want to see them increasing their Bitcoin production going forward. They did say that they are at 5.6 exahash is what we have them here, I believe, right? 5.6, yep. So we're pretty close to that. We are at 5.599.1. So really close to that. And they did sell approximately 300 BTC for 5 million, almost 6 million in revenue from that alone. So the big takeaway here is I would like to see them growing. They're obviously growing their hash rate, which is good, but their production has been obviously stymied by the heat and selling back to the grid electricity, basically. So looking at what they actually have here in September, what did we install? We installed basically 2,500 of these 90 terahash miners, and then we also installed the 3,000 of these 140 terahash miners here. That got us to obviously the 5.6 roughly exahash that they reported, which is really close. And we only had those mining for 10 days, while the other miners that they had installed previously were only operating for 15 days. So basically half of the month was they were operating and half of the month they were not operating. So they were selling basically half of their supply, you could say. So if they were mining in total, they would have probably been able to generate close to 700 BTC, I would imagine, somewhere close to that, if they were able to operate for the full 30 days in the month. So that would put them up, obviously, towards the top end part. But I think it's maybe more profitable for them to just sell the electricity right now or get credits on it. So it might be coming out that all of this supply here is basically 100% free and clear from any electrical costs. Possibly. I just don't know that, but I'm guessing that's possibly the case. So that is the production there. Looking at the institutions, so institutions did increase to 316 from 313. Shares stayed the same, it looks like, and percentage owned staying the same. The only thing that changed here is we have now 3 strong buy ratings, 7 buy ratings, 1 hold rating now, and we have a price target of $17, average of $13, and a low of $7, it looks like. So we'll see where that comes in with what we have for them. And if we look at the quarter here, we're looking to possibly make about 22 million in revenue for the quarter, which is obviously way low. It's almost, well, we had a 20 million roughly drop, 17 million here from the first quarter to the second quarter, and now we got another 21 million drop in from Q2 to Q3, it looks like, possibly. We'll have to see, obviously, how close we get to that number there. But looking at the numbers that we do have, the last 3 quarters is about 190 million in revenue. Current quarter is about 22 million, so combined 213 million. And if we're using the 50% net income from gross revenue, we're looking at $13.78, and 75% net income from gross revenue, we're looking at $20.68. They had them at $13, wasn't it? $17 for the high, 13 for the low, and 7. So pretty close to where we have them here, between 13 and 20. I would imagine that profit might be a little bit better because they are selling the electricity. So I'm guessing closer towards the high end here would make more sense on the 75% net income from gross revenue to be around $20.68. They are obviously at $7 right now. So way undervalued in my opinion as well. Hopefully in the coming months here, we will see, well, I have $20.68, but their high was $46.28. If Bitcoin starts running up, I think we could get close to that, if not breaching it, depending on if they can actually get the numbers on the Bitcoin production to go up. If they get closer to the 700 mark BTC per month, that's going to be huge, or close to that, 600, 700. That's going to be a huge game changer for them. And I think that's going to possibly happen with, obviously, the temperatures changing here towards the cooler side of things. They could possibly be mined for all of the month, I would think. And that would be a huge change for them. What else did I want to tell you about? I think that is it. I mean, yeah, basically it's just them being able to mine for the full month. It's going to be huge. And then obviously if Bitcoin starts going back up in price, I don't see them having a problem getting back to the 52-week highs or even blowing it based on the number of miners that they do have and how far they're going to be growing in the next basically couple of months. So that is it. Obviously, nice job getting miners installed, hash rate increasing. Would like to obviously see BTC production increase as well. So that's my only gripe with that. All right, let's take a look at Hut 8. So here's Hut 8 production update for September. So 277 Bitcoins were generated. 100% of the self-mined Bitcoins in September were deposited into custody like they've done so far in the past. Total Bitcoin balance held in reserves as of September is 8,388. And they have consolidated the most efficient miners at our Medicine Hat site, increasing hash rate efficiency by 11%. So that's actually pretty good. And then installed ASIC hash rate capacity was 3.07 exahash at the end of the month, which excludes certain legacy miners, which they anticipate will be fully replaced by the end of the year. So they do have some other miners. We'll take a look at those as well. Additional updates. So with Ethereum merge to proof of stake complete, they are actively exploring opportunities to move additional GPUs into our data centers while optimizing ASIC deployments across 3 Bitcoin mining sites to enhance hash rate. So that's good. And then unseasonably warm weather and global energy supply chain challenges caused power prices to fluctuate throughout September. And our operations team curtailed operations accordingly. So we'll take a look at how much they actually curtailed. And then production at our North Bay mine was interrupted mid-month, and new ventilation components were installed during the same period. So we do have that. And then here's a quote from the CEO, Jamie Leverton. So we continue to add our Bitcoin on balance sheet, which is the largest unencumbered self-mined stack of any publicly traded mining company. So Jimmy Leverton, as we head into the fourth quarter with strong momentum, we are focused on optimizing our Bitcoin mining operations while growing our high-performance computing business, which includes potentially leveraging our GPU machines to provide AI, machine learning, or VFX rendering services to customers, and mining the next most profitable proof of work digital asset during the idle time, which right now there isn't much as far as profitability goes with those coins until things kind of simmer down, I think. It's still a little crazy out there with that. All right. So let's take a look at the numbers here, and then we'll digest it all. So Hut 8 has about 193 million shares outstanding right now. Prices have obviously gone up a little bit to over $2 right now. Market cap is over 370 million right now as well. And the high for the stock has been $16.57 in the 52 weeks. The current hash rate is 3.07 exahash. Future hash rate that we have currently reported for them is 3.5. This is based on what they have reported as buying. Operationally, they are about 85% installed right now. Future hash rate growth is basically 16%. They don't have much growth left. Their average hash rate per miner is about 90 terahashes right now. BTC HODL is 8,388. That equates to about $160 million and change. Now, if we took that amount, converted it into buying Bitcoin miners right now. So if we look at, it was over here, Bitmain, we can see Bitmain and miners, they're selling the S19 Pros 100 terahash, are selling for basically 1,900. Spot market for the 95 terahash is actually higher, but I think with them buying such a large volume, they're going to be probably around the 25 to 2200 range when it comes to buying them, if not around 2,000. For my calculations, I took 2,500 to get, they could possibly buy 64,000 machines at 100 terahash. That would get them to 6.43 additional exahash in hash rate if they were to use that amount to actually grow. That would get them to over 10 exahash, almost 11 exahash total. So that is something I would like them to use, this BTC HODL, because right now, obviously, the prices for miners are relatively cheap. Once Bitcoin starts going back up in price, the miners' prices are going to go back up as well. Obviously, their value is going to go up in here, so it's kind of a wash, I would think. But right now might be a good time to start kind of nibbling and buying miners. That's just my take. HODL market cap is 43%. Obviously, each share has 83 cents, so that's pretty high there. So they're obviously not being valued based on their growth. They're being valued based on their HODL position, it looks like to me. Okay, production updates for the months. So they've been kind of all over the place here, up and down. Since January, they were at 308 BTC per month. They mined. February, they were 289. March, 345, which was their best month. Their second best month. April was 309. May was 309. June was 328. July was 330. And then August was 375. So that was their best month there for production. Now we come into September of 277. Obviously, the impact of GPU mining not being available has hit them pretty hard. It hit them by about 26% of their revenue, which obviously we're going to see the same thing, possibly if not a little bit higher for Hive as well. So we're really looking forward to seeing those numbers come out. But I think October is going to be possibly even worse unless they are able to grow their hash rate here, because they were able to mine a little bit of Ethereum for about a third of the month in September before the merge came in and basically you couldn't mine anymore. So that's obviously not good news there. It's a decrease of 98 Bitcoin from August, 26% decrease in that. They obviously don't sell anything, they hodl everything, so they didn't generate any income on that. Looking at their growth here, they have been growing kind of oddly too. It hasn't been very consistent. So in February they grew 252 petahash, March 52, April 43, May was 150 petahash, June was 142, July was 141, August was 59, and then obviously September was 90. They don't have too much growth left in them, so I think that's possibly they're just getting the miners installed when they get them in. And let's take a look at the miners that they did install here for September. So we did install only 970 of these 93 terahash miners here. That got us to the 3.07 exahash that they reported. Revenue-wise, 5.5 million. Is that correct? Did I do that right? 5.48. So we're pretty close to that. I'm at 5.55. So that's actually a little higher there. Probably have to adjust that a little bit, just to get me a little bit closer to that. But other than that, they were operating. The other miners that have been already installed for about 20.5 days. It looks like, based on the numbers here, we could probably drop that down a little bit more. I'll do that after the video, just to get the numbers to match up a little bit closer to what they actually provided. So they do have some of these older miners here that are the 77 terahash miners, the 87, the 89s. The 90s are okay. I mean, even the 89s and the 87s are okay, but I would definitely look to get rid of these 77 terahash miners coming up here. And then these 84 terahash miners, yeah, I would have to definitely take a look at those and see if they're bringing in anything. I mean, right now they're bringing in about $10 in Canadian, looks like, per miner, which isn't too bad. So those are, I think, are okay. Anything over 80 should be fine, but anything below that, I would definitely look to get rid of those. And then institution-wise, we can see institutions did decrease a little bit here this month to 171 from 173. Shares outstanding, or shares owned by institutions, went down as well by about 150,000 shares to 28.08 million shares. Percentage owned dropped to 14.45. And then we also have a decrease in the strong buy rating from 2 to 1. Buy stayed the same at 3, hold at 1. Price targets did fall quite substantially to $4.40 from $8.37, and average came down to 363 from 457. Low came in at 294 from 304, so obviously a pretty big decrease there, and that's based on the Ethereum mining. It's no longer feasible, so we'll have to see where they come in at with the high computing mining and what they actually report on alternative GPU mining as well. Excuse me. So for the quarter, we're looking at possibly 21 million in revenue. We'll see how this plays out. If we're close to that, Canadian, that would be 29 million roughly. And if we use the last 3 quarters, which is 110 million plus the 21 million in this current quarter, we're looking at 131 million in revenue. 50% net income, we're looking at $6.78, and 75% net income, we're looking at $20.17. But seeing how they don't have much growth left in them, 16%, they might be getting a little bit of discount here, so 15p might be reasonable. So $7.62 to $5.08, and that's not too far off from where we had the analysts at 440, so even higher than the analysts are thinking right now. But obviously that's going to decrease that should decrease the revenue going forward unless they're able to make up for it with high computing, alternative coins mining, which right now is not very profitable, and obviously Bitcoin production. They have to get that up in order to continue their revenue increasing, because right now we're seeing that it has been decreasing here ever since GPU mining has stopped. I mean, it was a pretty big hit here from 8.3 million to 5.4 million. So it's 3 million less in revenue. If you extrapolate that over the 12 months, you're looking at, 36 million in revenue that's lost basically from GPU mining. That is a pretty big hit there. So yeah, that is it. That's kind of what we're looking at here with them. I think the only thing I want to say on Hut 8 is basically we want to see Bitcoin growth continuing on. Not too big of a fan of their HODL position. Obviously, Bitcoin goes up to 50,000, they're going to be making out bank. But right now, with the way things are, we don't know if that's going to happen this year or is going to happen, excuse me, or if it's going to happen sometime next year with Bitcoin possibly starting to go up before the halving event. So right now, would rather have them use some of it, not all of it, but some of it to buy miners, grow their infrastructures, their data centers, and things like that, rather than sitting on this HODL position that's not doing anything for them right now. But that's just my take. Let me know what you guys think of that, your comments on Hut 8 and Riot, obviously, and where do you guys see them going possibly too. So that is it. Spreadsheet is available to my Patreon members, so thank you everyone there for their continued support. Thank you so much for watching, and if you guys enjoyed the video, hit the like button, subscribe, helps me out tremendously. Love you all. I'll see you guys in the next one. Until then, bye.